irfansupermart.com.
What is your outlook on emerging market debt for 2012?
I feel generally positive about EM bonds in 2012. I still think there are headline risks out there in the market, but I feel that EM bonds have the potential to provide good returns in 2012. But when I really think about EM bonds, I think about potential for multiple year performance. If we look at the performance of EM bonds over the past decade, EM bonds have provided stable, consistent returns. So I think this is something that it's not just a short-term phenomena, but the potential will also ride into the coming decade.
How much upside do you see and what are the key drivers?
EM bonds can provide yields of around 6 to 7%, and that provides a base return for investors. But on top of that, EM bonds is also a story about improving credit quality of the countries and of the companies that we invest in, and this translates into potential capital gains that can be captured and gained by higher NAV.
In your opinion, why is the credit quality improving?
The credit quality is improving because these are countries that for a long time have emerged as being poor countries. They are economies that are increasingly well managed. Unlike the troubles that we see in Europe with very high debt levels, a lot of these economies have been managed pretty responsibly. A debt to GDP ratios of 50% or less, and they have demonstrated over the past decade the ability to weather through growth cycles and different crises, especially when we look back what happened in 2008. So I don't see this as a short-term phenomena, but a structural phenomena that will, in my view, carry on at least for the next decade.
What about the downside risk?
EM bonds, I think first and foremost, we have to get it clear that EM bonds are not a safe haven asset. Okay? EM bonds are a risk asset, and like any other risk asset, it can underperform in a period of global risk aversion. Now, we've seen that in late 2008. We saw that again late last year. But what I think is also important to mention is that EM bonds are definitely more stable or do not underperform as poorly as equities, and have shown time and again that they can recover quicker. So, that provides a more stable return profile. But again, it shouldn't be viewed as a safe haven asset.
Within emerging market debt, is there one idea or sector that you feel particularly bullish or bearish about?
We like emerging markets bonds as a whole. There are particular sectors that I think we are pretty comfortable with. We do like to invest in resource companies, for example, oil and gas companies. When you invest in a bond, you don't need oil and gas prices to increase multiple times over years for your investments to do well, as long as oil prices remain relatively stable and the companies make a decent amount of money, your bonds pay back on time, your investments will do very well. Another area that we do like, and I think we see potential over the medium term, emerging market currencies. Internally, we think emerging market currencies are undervalued versus your major currencies.
What is your advice for investors looking to invest or are currently invested in an emerging market debt?
I think as I've mentioned earlier, we think emerging market bonds provide stable, consistent return over time. So we urge that investors be patient because the compounding effect that you get from the stable return profile actually provides very good returns over the long term. At the same time, I think we don't see this as a thematic short-term phenomena, and so it's not too late to capture the upside gain for those who are not being invested. But I have to say, at the end of the day, it is not a safe haven investment. There are risks associated with emerging market bonds, and investors should, take their time and study and get comfortable with the asset class.